What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade management, and closing order. In this video, we are going to cover a strangle. I'm gonna look at AMD. It's been a bread and butter trade. It's one that I can put on some naked premium on in this Johnny Trader portfolio. It is going to use a little bit extra buying power, but I'm very, very light on positions here, so I'm okay with that. Stock has been trading between 140 and 180-ish for the better part of 2024. You can see this is kind of our range here. You have had some big spikes to the upside. I think this is a perfect short premium position for this sort of account. So I'm going to look at somewhere around a 1 standard deviation strangle here. So on the downside, maybe the 135 strike. We're looking in the August expiration, 51 days to go till expiration. We're going to look at the upside, maybe a tiny bit of short delta because of the skew here at the 190 strike. It trades around $5 and change. It does use more buying power than I typically like to use. I like to use about $1,000 in total risk on this in this portfolio. But given that I have so few positions on, I think it's time to add some short premium and put a little bit extra risk on here. So I'm looking at roughly a 1 standard deviation strangle. You can see pop is about 75%. When we look at the curve, our at expiration risk profile here. So we've got roughly, 30, 40 points on either side of the stock. So big wide range to hit over the next 50 days. $5 in premium. I'd like to get about $1, maybe $1.50 in profit out of this position. That would be my target for when I close or potentially roll out in time. So we're going to try and get filled here. 512, we'll start there and see if we can get a fill. No fill at 512. We'll cancel and replace this one. We'll go down to 511. We'll give them the penny. No fill there. We'll adjust this again. Go down to 510. No fill there. 509. What's up, everyone? We've got a trade adjustment to make here into what has been a little bit of a down move after a huge move higher in AMD. So AMD down $5 here on what is looking like a weak market. You can see the stock has had quite the rally since we put this trade on. We put this trade on the 26th. If we go and look back here, it was trading somewhere around 160-ish. So the stock has rallied very, very significantly. We can actually pull up, if you right click on the order chains here, you can pull up the market snapshots, which will tell us a bunch of information about the stock. So at the time of the trade, it was at 159.50. You can see my overall delta exposure was only 5 short deltas, 6 short deltas here. Had a very high theta, of course, because it's a big position. IV rank at that time was 30. It's now 80. So you've had a lot of things work in our favor in terms of volatility, time decay. We've gotten hit by some delta, though. Into this down move, though, and this pop in volatility, it's an interesting point in time to consider rolling this position and rolling up that put. If we go to the trade page to look at our position, you can see this put, which we originally sold, at about $2.10 here, all the way up here. When we look at the chart of the option, you can do that by right-clicking here, go into View Chart. You can see most of the value, if not all of the value, has come out of this trade. The stock has come down. If we pull up the change field, which gives us an idea of how much the option prices have changed. Obviously, we're making a little bit back on this call, but you can see we've gotten a little bit of juice pumped into the downside. That's a function of this move as well as a change in volatility. So we're going to take this put and try to flatten out our delta a bit. So if we look at the position here, if you remember, we started with 5 short deltas. We've now got 35 short deltas. So let's try and bring this back down to something a little bit more manageable. We'll say, 15 or 20 deltas, which would be a roll of about 10 or 15 deltas. So to do that, we would take this put, which is at the 135 strike. We can roll it to the 150 strike. That'll pick up about a net of about 8 deltas. We want to get about 10 or maybe 15. So let's go to the 155 strike. This will net us out 12 deltas, collect another $2 and change in premium, which is a relatively high credit here. Let's try and route this at the mid price, 226. No fill there. Let's try and do that again. See, the markets are moving with a little bit of a bounce here. 223. Fill there. Go to 220. All right, so we got that in for 220 here. Just rolling up that put. So that'll give us pretty decent credit on that position here, reduce some of our delta, and help manage the position. So going forward here, we're going to have the 155 put, the 190 call, Strangle, relatively delta neutral. You can see our overall delta on this position is a total of 22 short deltas, so we reduce that by about 12. What's up, everyone? We've got some adjustments to make in AMD here. The stock is near the lows. It's having a nice little rally today, up $4 or $5 at one point this morning. You can see it's had a lot of chop back and forth in this 150 to 170-ish range. We're out a couple $100 here, but lots of premium left in this position. So we've got this at the money put. When you look at the delta, you got about a 47 delta there. On the call side, we are short the 190. That's got about 10 deltas. So we've got about 30 to 40 long deltas here, net on this position. When we're managing a position and we're rolling down or up the untested side, we want to reduce our overall delta exposure by somewhere around 25 to 50%. So we are long right now, 30 to 40 deltas. We'd want to pick up 10 to 20 deltas on a roll down of this call. So when we go to buy back this option, you click the ask price here, trades at about $1. It's a 10 delta, so we want to pick up somewhere between 10 and 20 deltas. We could go to the 175 strike. This would pick up 12 deltas. We can go to the 170 strike. That would pick up about 18 deltas and cut our overall position down to about 20 long deltas. So I'm going to roll this down to the 170 strike here. It's going to trade somewhere around this 273 mid price. Here you can see the delta. I'm picking up 18 short deltas against the 48 delta long call, so we're cutting this down significantly, and it'll add some more premium for us over the next 25 days as well. So we'll try and route this at 277, the mid price. We'll see if we get filled here on this order. And there we go. We got filled. So now we've got the 155, 170 Strangle in AMD. We've got a total net credit of $10.06. It's currently trading at $12.62. So we're out about $200 and change here, but we've got a lot of time and a pretty wide range to hit here, all else being equal. So our break-even points will be somewhere around 145 on the downside. On the upside, it'd be around 180 because of that $10 in premium we have. So we'll see if this works out over the next couple weeks. What's up, everyone? So we've got a closing order today in AMD, which is up $14 and change here after earnings. E-mini S&P 500 futures having a very strong day here, up 60 points. NASDAQ up 400 and change. The chip stocks have been moving. So after earnings here, we've had the perfect move, right? So we had an in-the-money put at 155, an out-of-the-money call at 170. We sat with a little bit of long delta here just to lean a little bit directional into kind of the bottom end of the range. So this position, it's trading at 864. You can see we've collected $10.06 in premium throughout this whole duration with the roll up and the roll down. So it's time to go with this position. 16 days to go till expiration. We're going to take this position and close it out for hopefully a nice little profit here. So we put that in at the mid price, $8.50, closed it out, $156 profit on this Strangle. This stock has been moving. It's been in the money on the put side, in the money on the call side, a little bit of both, a lot of pain along the way, but staying mechanical, reducing your delta exposure, collecting extrinsic value have all mitigated that loss for a nice little win here.
Comment below on what strategy you'd like me to cover next. If you want to catch these trades live, tune in to Johnny Trades every Wednesday at 9:40 a.m. on Tasty Live. Peace.